I might go briefly too on that as well.
Yeah.
Aussie vols, if they're getting a bit picky up, then I'm going to go a little bit on weak US data. Bets on the interest rate, and I'll talk a little about the cable, Brexit, and just the surprise how low the volatility still are, even though to me the risks are as big as ever. Good morning and welcome to the Saxo Bank Morning Call. It is Thursday, May 16th, 2019, and we have some interesting developments overnight. Yesterday, equity markets trying to put on a bit of a rally. We have the news that Trump is looking at delaying these decision on these auto tariffs, a 25% auto tariff that would really, of course, massively impact global trade. And this was seen as risk on. Others might see this as the Trump administration wanting to focus all their efforts on China. And indeed, overnight, the risk sentiment changed back to the downside as we have actions against the Chinese telecom equipment maker Huawei, where it looks like all companies in the U.S. will be forbidden from purchasing any or selling any equipment to Huawei without express permission. This is seen, of course, as an aggressive move and a bit of an escalation in these trade showdowns. We're seeing equities offered overnight, risk off a little bit, especially out in Asia. If you look at something like the Kospi index, I've got a chart here of the Nasdaq. You can see the move overnight pretty modest relative to what looked like a pretty optimistic close. And keep in mind, we don't have a decision yet on those auto tariffs. It's a really thorny issue from the U.S. side because they may want to do these tariffs, but global supply chains for auto parts and so on are very globalized. It would affect U.S. car makers as well. And of course, the sticker price for U.S. cars for the U.S. consumer would not be a popular move. So we're looking at basically this trade issue really buffeting all markets. So Matthias, you're our Forex options strategist here, and we're seeing pretty darn quiet markets, but we're seeing a little bit of pickups here lately. Of course, this CNY move, the renminbi moving and bumping up closer to that dollar CNY, 7 level in dollar CNY. You have a CNH chart here. Talk us through what vols are doing as we've seen this move unfold.
Yeah, so everything over the last couple of weeks has been trade related.
Yeah.
And we're coming from really low levels. I mean, it was really depressed a couple of months ago, and we start to see a pickup in volatility. And especially now in CNH.
So the black line there is the actual implied volatility in the rightmost axis there. It was all the way down to sub 4% for a month.
So historical low levels, and now when we see a little bit action in the market and spots start to move, of course we're going to see a lot higher volatility. We're coming from really low levels, so we're seeing pick up in volatility to 6.5–6%.
The thing is though, it seems to me like either it stays capped below 7 or you're going to see quite a large volatility. But is there any really big blowout in terms of anticipation? You've got a little bit on the risk reversal there, but are you seeing a big blowout, or is it just sort of a modest pickup?
Yeah, it's a modest pickup so far. I mean, if we're going to get closer to 7, we're probably going to see more of trade for a
people
7 break.
Buying more low delta stuff for
exactly. But so far it's more of a gamma trade and trade related. So for example, we see more interest now over the G20 meeting. So 1 month is still trading lower than the 2-3 months. So we have a spread of like 0.5% in CNH, and we see the same in yen, for example. And
interesting, on that G20 meeting, our chief economist, Stein Jakobsen, out talking about that G20 and saying doesn't look like the forum for really big decisions on the U.S.-China relationship. The WTO is a big topic there, and Trump is completely anti-WTO. So maybe that event itself, but it could be a bit of a disappointment if people are expecting a massive breakthrough there. But you're saying everything linked to all this trade ups and downs is certainly the case in FX, even in equity markets. And dollar yen has also been one of the few currencies moving a bit, pretty much in reverse of dollar CNY. And you've got a chart here showing, 1 month vols have also picked up a bit there, but still pretty modest stuff.
Yeah, so we still see the same kind of pattern in dollar yen and dollar China, and the same in the risk off currencies. We see volatility is higher, skew is higher, so dollar yen downside is trading bid.
I would argue it's a bit interesting that look back at that flash crash on this chart here. You're seeing at the bottom there. That's how much the premium is for those puts versus the calls. And back in that early January, essentially crash in yen crosses, the skew is about the same as what it is now, even though the move recently has been more modest.
Yeah. So there's risk priced in.
People buying some insurance.
Yeah. So yeah, exactly. We need insurance for potential breakup in the trade war, and so it's expensive at the moment for protection. Dollar, yen, euro, Swiss, and so on.
Interesting also that we came off I think it was a record 1 year low and record low in 1 year volatility, implied volatility on dollar yen we posted in recent weeks. So interesting there as well. Okay, so Aussie, overnight we have Aussie as well. Again, one of the currencies a little bit able to move here, partly impacted by domestic issues, but also impacted by the trade war situation. Obviously, the Australian economy would be one of the most heavily impacted on a slowdown in China and demand from China for its commodities. Jobs data overnight, a bit confusing. We did see new lows in the pair. That jobs report, one of these classic mixed numbers or mixed reports where we're seeing what looked like a positive headline number. However, most of that was on part-time employment. And then the participation rate ticked up, which is good news, but that also meant that the unemployment rate ticked up even more. It all led to a bit of confusion, and essentially it wasn't strong enough to avert an increased pricing given trade pressures in the background for the RBA to cut potentially as quick or as soon as June. So, interesting that we've broken below 70 in Aussie dollar, but we're not seeing a big impulsivity there. I think it's being held back by the dollar CNY assumed ceiling, if you will, there. So Aussie still on the downside, but again, constrained volatility. Other interesting data out yesterday, we had some weak U.S. economic data. The retail sales looking quite weak. It's been a very volatile data series, but this one was weak, and we saw industrial production also very weak. I've got a chart here just showing briefly. We're seeing a cluster of rather low year-on-year readings. We're coming down from 5+% in 2018. If you look at the dark blue line and the green line, which is the headline and core year-on-year retail sales numbers, so 5% plus, we're back down to more like 2 to 3% now. Suggesting a real slowdown in the very important consumer sector in the U.S. And this kind of data plus the overall trade war is leading to increased pricing of Fed rate cuts. We're getting close to pricing in 2 cuts now by the December meeting, which is what you're seeing here, that blue line on the chart showing the odds of a rate cut at the December meeting or by the December meeting up to 77% now. And many pricing the 2 cut or even more scenario. I would argue if we're seeing more clear signs of recession, and especially if we see an ugly showdown over trade between the U.S. and China, we could be 100 basis points lower on the Fed funds rate by that meeting. More stuff out there, actually a bit more activity than we've been used to recently in FX. We have cable breaking down below the lowest levels it's seen since all the way back in February, breaking that 129 area. The clarity on Brexit really not improving. It looks like May could be exiting very soon if this early June vote fails for her deal. Somehow she's trying to recycle this deal for the 4th time for a vote. I have a hard time seeing it passing. Those cross-party talks have not gone well. Matthias, we have seen a bit of price action here, pretty decent trading range expansion, but the volatilities are still pretty dead. Yeah,
we don't see much interest in volatility at all, especially not ahead of the meeting in June. Yeah, we see a pick up in the 1 month volatility that include the potential vote in first week of June, but it's quite depressed volatility still. And what really surprises me, if you look at the vol curve, you look out the long end stuff. To me, the long end situation here has never been as murky or uncertain as ever. But just people are giving up. Yeah, there must have been a lot of insurance that has been bought that is not paid to have, and people are just maybe sick of buying insurance or what? Having insurance in sterling over the last year has been extremely expensive because spot hasn't moved for a very long time. And as soon as we see these kind of move south in sterling, we see people starting to buy insurance again. Risk averse is picking up a little bit, but this time it's nothing extreme at all. So we expect this to prolong for several months.
And I wonder, to a degree, you said everything, or we've talked about everything is trade related. I wonder if we talked a little bit about Euro-Swiss earlier, and of course Euro-Swiss is or the Swiss franc is a classic risk-off, safe haven type of currency to usually to own in times of trouble. I think it's been a little bit inconsistent over some of this, but it has really picked up here recently over the last several sessions. I'm wondering if there's two angles to Swiss franc right now, not just the trade issue, but also the EU existential issue. We're seeing ahead of these elections in a week plus time, these EU parliamentary elections, we've seen the Italian leaders out with some rather defiant rhetoric, or at least Salvini out with some rather defiant rhetoric on budgets. And the Brexit situation also getting worse. So I wonder if there's a dual risk on, risk off for Swiss franc here. But Matthias, you've got a chart here showing we have a similar sort of pickup recently in the classic patterns, risk-off patterns.
So, I mean, basically the dollar CNH and dollar yen and euro Swiss vol charts more or less looks the same. We see high volatilities and we see skew risk reversal is picking up as well. The difference here in euro Swiss is that we haven't really seen any setback now over the last couple of days that we had in CNH and yen, for example. So volatility is still trading on the high compared to the last couple of months, and risk reversal is still...
And to me, that would speak a little bit to maybe this sort of EU existential angle on things as Italian spreads are starting to pressure multi-month highs and things like that.
So we see, for example, Euro-Swiss vol is... the spread between Euro-Swiss and Euro-Dollar volatility is the narrowest for over a year. So we see definitely big buying interest in Swiss protection or volatility.
And keep in mind, I've also got a Euro-Swiss price chart here. The Euro-Swiss, it's sort of the mid-range. It looked like it was trying to break above 114.50 to 115 when the mood was a bit more optimistic. 112, I think that's going to be an awfully tough nut to crack if the S&B is on the watch there, but still interesting to see that pickup in implied volatility and insurance buying. Okay, before I head to the calendar, I just wanted to point out one interesting thing. I think on the geopolitical front, we're seeing a lot of noise out there. To me, some of the most worrisome noise I can remember in a long time. Look at the spread between Brent and WTI, in this case WTI versus Brent. WTI sells at $11 discount for the prompt month, essentially the lowest since back in 2015. And historically low pricing, and a lot of that is due to high Brent pricing, the geopolitical uncertainty feeding straight into Brent and less so into WTI because, of course, that market is more domestic and the massive shale oil supply is there. So an interesting one, very, very stretched spread there. Okay, let's look at our calendar today. A couple of interesting points I wanted to bring up here that I think add further perspective. We have these rising, I think, recession concerns out of the U.S. One of the quicker high-frequency data points is that initial weekly jobless claims number. We've seen some very elevated numbers last couple of weeks. You could argue that this is essentially just a mean reversion from what were some weeks prior to that were extremely low, historically low in per capita terms for those jobless claims numbers. But if we persist in this range above, let's say, 220 to 230, to me it's suggesting a pretty weak or maybe some concern in the labor market. And if you look back and historically, this you see a stabilization and rise in the jobless claims well before you start to see it feeding through into those monthly numbers. So something to keep an eye on. We also have a couple of Fed speakers out. The Fed's Brainerd with some speech that's generally along the lines of the economic and monetary policy outlook. She is an influential voice on the Board of Governors, so do keep that in your sights. And the Mexican rate announcement as well. Mexican peso bumping up a bit on that. What looks like it may be a decision to delay those auto tariffs for now, though that decision is not final. So let's see. There could be some indications there about who has got the upper hand within the Trump administration on trade policies. Lighthizer, who's against going after Europe, I think, and Japan, and more focused on China versus the likes of Navarro in the Trump administration. So keep an eye on that. Keep an eye as well on the Australian election this week, and I think maybe some further downside risks for the Aussie there if a Labour government is coming to power, depending on the degree of the mandate there. That is it for today. We will not be back tomorrow for the Saxo Bank Morning Call, as it is a national holiday in Denmark. Good for us, bad for you, because I think the rest of the world is pretty much open for normal business. But until next Monday, take care out there, and we'll be back next week with the Saxo Bank Morning Call. Thanks for joining.